It's a function of saying, I'm China and I have or Vietnam or any trade surplus creditor nation. They all they have to say is this: I no longer want to park my savings in dollars and US debt. I prefer to own gold, or in some cases in platinum and silver. I want hard assets. I want to hold these assets that are outside the purview of the United States. No, in other words, there's no sanction or confiscation that they can impose on me. That's why gold is in this primary bull market, in my opinion.
Conditions are right for another gold price hike, possibly as soon as this week, and potentially even surpassing a new record high. China's gold accumulation isn't new. Since 2000, it has grown official gold reserves from 395 tons to over 2,200 tons. China is stepping up its gold game. As trade talks with the U.S. remain uncertain and inflation lingers, Beijing has launched a sweeping financial strategy to shift its economic anchors from the U.S. dollar to physical gold and the yuan. Market analyst Michael Pento explains that surplus nations, such as China and Vietnam, prefer storing wealth in hard assets beyond U.S. control, thereby fueling gold's primary bull market. Examining his portfolio, he holds positions in both gold and platinum, but views platinum as having greater catch-up potential. According to UBS Global Research, although gold remains supported by strong macro uncertainty and portfolio diversification demand, platinum has begun to outperform other metals, leading some market watchers to speculate about possible investor rotation. On one recent trading day, platinum rose about 4%, far outpacing gold and silver, which gained less than 1%. Based on fundamentals, Pento criticizes Bitcoin for its lack of regulatory oversight, yet he acknowledges that its appeal stems from growing distrust in fiat currencies. While reflecting on the market, Pento underscores the declining trust in U.S. treasuries and calls this shift a major red flag. If foreigners stop recycling surplus into U.S. bonds due to insolvency or inflation, the dollar's reserve status may further erode. Since April 2, emerging market local currency bonds have recorded an inflow of $2.4 billion, up from $500 million in March. Looking ahead, Michael Pento is not always bearish on markets, but rather on flawed fiscal policies, such as excessive debt and money printing. Moreover, Pento warns inflation could re-accelerate due to rising oil prices and upcoming tariffs, making the Fed's 2% inflation target unrealistic. Before we dive into Michael Pento's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
So platinum is breaking out. It's actually more rare or rarer than gold is. It's less prone to oxidation. Gold doesn't really oxidize at all, but it's even more noble metal than that. And it's less than half the price of gold. So there's a lot of catch up to do there. I'm not saying gold's going down. I think I own both. I haven't sold gold, but I think it's a wonderful investment. But that's, people are, the whole Bitcoin phenomenon, even though it's just so antithetical to what Bitcoin was supposed to be. But the reason why it's so popular is because people are dying for another alternative to the US dollar. And not only the dollar, I mean, definitely it's not, not that they're finding solace in the euro or the yen or the renminbi. So they're looking for places to park their money. Of course, I think it's a height of hypocrisy to say, well, a Bitcoin has its value because it's decentralized, and yet Wall Street embraces it. And then, everybody knows who you are when you buy a Bitcoin ETF because of KYC and AML laws. They all know you are. They can confiscate your Bitcoin, your supposed holding. But you need Wall Street to justify a value that's, I think it's like $106,000 a unit. A unit of what, Dunnigan? Do you know what a private key is, right? It's just a bunch of numbers and letters, electronic numbers and letters. You could write those down on a piece of paper if that makes you feel more valuable about it. That's all you have. That's what Bitcoin is. It's a private key that allows you access to a public key that gets you to a decentralized ledger. The blockchain is a wonderful technology. As to how anybody thinks that can replace or supplant a precious metal is beyond me, because there's an unlimited number of blockchains that can be created. So anyway, I digress. But the reason, the idea, the purest idea of Bitcoin is a way of getting yourself out of the fiat currency system. And so some people are running to that, cryptocurrencies. I'll run to platinum and gold.
After you shout out,
even a little silver. I haven't gone there yet. This is a very unusual situation where you had stress in the market. And usually when you have a fear of recession and the market starts to fall, what do people usually do? They usually buy a treasury, which is denominated in dollars. So dollar tends to rise. It's part of, if you look at the four horsemen of the economic apocalypse, which I would usually gravitate to in times of recession, depression, or when there's a market crash, well, one of those things is the dollar. Well, the dollar has been performing terribly in times of stress. And that's a huge red flag for me. That tells me that faith in our sovereign bond market is faltering. And if foreigners no longer have the desire to hold our bonds because of insolvency or because of inflation or just because there's no more trade surplus to recycle into dollars, that's a big warning sign. So when the problem isn't, or I say the solution isn't to own dollars and bonds, that's part of the problem. If you don't have a viable plan, you can be in a big world of hurt as far as your retirement is concerned. Well, look what's happening with gold today. I mean, I think gold was up about over 1%. And notice that you didn't get any ballast from silver. It's gold. That's why I favor gold over silver. Gold is money. Silver has an industrial component to it. So does platinum too, by the way. But platinum is just soaring, right? I mean, it was overdue for a correction. So, not that I'm giving it advice to you or your listeners, but if you don't have any platinum, today would be a wonderful time if you're suitable for it to take some platinum into your portfolio. But the salient question is, what's going to happen with inflation when oil prices spike by 8%, and then you have tariffs on top of that? It's very difficult to believe that the rate of change of inflation, if you look at inflation right now, it was coming down very, very slightly, very slowly and very slightly on a rate of change basis. But not again, that doesn't mean price. I have to be very specific. Prices aren't falling. The pace of increase is slowing. That's a huge difference. But I think the tariffs have yet to kick in, and now this increase in energy has yet to kick in. So I would be hard pressed to believe we get anywhere near the Fed's target. And I always hasten to add, you can bleep this out, asinine, because this is an asinine target of 2%. I don't think that's going to be hit anytime in the near future. And I get this question a lot over the years. I've been in the public eye since 2005. So when CNBC needed a buffoon, there was like a straw man to knock down, like someone who was negative on the housing market. So they used to make fun of me, and I used to debate Art Laffer and everybody who was a permeable. And here's what I've been permanently bearish on. Not stocks. I'm permanently bearish on the foundation of the way this country's been run since the year 2000. I'm bearish on printing money. I'm bearish on inflation. In other words, using inflation as a way of floating assets to protect banks. I'm bearish on our debt and deficits and our current account deficit. Those are things I have been bearish on. So if I sound like I'm bearish, I'm saying I'm bearish on the fundamental foundation, the way this country has been operated on. I'm also bearish on the way Japan and Europe and China are operating too. And so it's not just unique to the United States. But to say that I've always been bearish on the stock market is just incorrect. I wouldn't have a business if I didn't provide a pretty steady return for my clients. So I have a model. It's based on the second derivative, or the rate of change of inflation in the context of growth. So I know when to own bonds or when to short bonds, what currencies to own, what commodities to own, and what equities to own. That's how I manage money.
In the interview, Michael Pento warns that a shrinking labor force, persistent inflation, and rising tariffs are crushing the U.S. middle class. He criticizes the Fed's 2% inflation target as arbitrary, arguing that true price stability means zero inflation. Since re-entering the White House in January, Trump has imposed new tariffs on imports from around the world, implementing a 10% tariff on most items while targeting goods from specific countries and sectors with even higher duties. Economists have warned that the new levies will raise costs for companies and lead to higher prices for households, risking the return of an inflation problem that appeared to be subsiding. The U.S. Central Bank, the Federal Reserve, aims for an inflation rate of approximately 2%. It hiked interest rates dramatically starting in 2022 in an attempt to get then rapidly rising prices back under control, and has made only limited cuts since then, even as the issue has moderated. Regarding digital innovation, he argues that digital currencies are merely a stepping stone to central bank digital currencies, which would give governments total control over personal finances, enabling negative interest rates and preventing cash withdrawals or bank runs. Let's get back to the interview.
Well, the larger trend is that the labor force is shrinking. So you have deportations. I think Trump just got authorization to remove 500,000 people from the United States. And the border is, for the most part, closed. So on a rate of change basis, the demographics are all upside down now, which is, listen, I'm all for controlling the border. I'm just saying that the labor force growth is one half of the input to GDP. So you have productivity growth and you have labor force growth. Well, the labor force isn't growing, it's shrinking. I don't know much about DC. I have a niece that got laid off of her job. She worked for the government. Do you know that the calculation was that there was 70% of all Biden employees, all of Biden's employment, 70%, 70, were government-related jobs, either directly working for the government or contractors to the government. So that's over with. That's gone. So yeah, that's why we're seeing a lot of stress on the consumer. Not only the fact that the labor force isn't growing, but we look at the pressures on inflation. The tariff level is going to be, even if it stays where it is, doesn't go any higher, doesn't go any lower. Trump says, and Bessent says, and Lutnick says that the tariffs aren't going away completely because they love that revenue that's coming in. So it's going to be 6 times higher than it was in last year. The level of tariffs 6 times higher. And then you add on top of the fact that inflation is just not going anywhere near 2%. So I'm talking about, here's the truth. I've said it before in this program, and I have to say it as succinctly as I possibly can. The level of inflation has destroyed the middle class of this country and down. And the fact that inflation is only growing at 2.4% now, it's growing at a rate that's above where they can sustain their standard of living. And it's also growing at a rate that's higher than the Fed's target of 2%. And the fact that we just have oil shot up by 8% this morning is not going to help the calculation. So tariffs have yet to kick in. That's going to add to price shock. I don't consider it inflation. It's a price level increase. And then you have the energy increase on top of that. So not going to get any relief anytime in the near future. And you add on top of that the fact that the Fed absolutely cannot lower interest rates at this point. Cannot lower interest rates because even though they would like to do it, and I think they will do it, especially when Powell gets replaced in 2026 by some version of Al Capone. Right now, the Fed is holding their ground because the inflation is not down to their target level. And there's a reason to believe it could be headed even slightly higher than it is right now. In 1913, when you formed this creature called the Federal Reserve, one of their mandates supposedly was for stable prices. That's what Congress has given them, the edict of stable prices. Now, I consider stable zero. I consider stable prices not going up or going down. So that's the definition of stable. But somehow that got under Ben Bernanke and in the zeitgeist of today, every central banker on the planet in the developed world says, yeah, 2% sounds like a good number to me. Even though we're not going to meet that number for 6 years. We're going to be above that number for 6 years. 2% is the new definition of stable. And the reason is clear because they just can't let asset prices fall because that's the assets that banks own. They own, mortgage related debt for the most part. And if home prices fall, banks are going to become insolvent, run on banks, and then they stop lending and the economy crumbles. So they need to get stock prices growing. They need home prices growing, and they think that's going to lead to nirvana. But on the fun thing happens, Bernanke was a 2007 phenomenon, right, Donegan? So on the way to 2%, home prices didn't go up by 2%. They went up by 20%. And now no one could afford a house. So the first-time home buyers have been priced out of the market. And so if you can't get the first home buyer in there, then the second home buyer can't sell. And then, you have a frozen house. Transaction market is now frozen. So this is what happens when you morph from stable prices and sound money, which is a gold standard. You limit the base money supply to 2%, which is commensurate with the mine supply, about commensurate with the mine supply to gold. Then you just eliminate all these bubbles. And by the way, stop bailing out banks. Let there could be a fractional reserve system, which is horrific in itself. But when you have a fractional reserve system and one of these banks goes amok and lends much more than they have in assets and liquidity runs dry, do not bail them out. Let them fail. And then we will not have any more inflation in this country. And we'll have a solvent and viable middle class, which is absolutely essential to a healthy country. This is the abrogation of the free market capital system. I see. That's why we're talking about things like why would this love affair with digital currencies, which is, I think, the precursor just to pave the way for central bank digital currency. Where right now, if let's say you have your bank at say Wells Fargo, and all these banks say the Fed says the central bank says we are now going to charge you a negative interest rate on your deposits. And then we'll make it 5%, negative 5%. What would you do? Well, you would run to your bank at Wells Fargo and you would say, okay, I want all my money out. I'm taking my physical currency out and I'm stuffing it under my mattress because I don't want to lose 5% per annum. Thank you very much. Well, in a central bank digital currency, they have plenary control of your life. They see everything you buy, everything they sell. There's no more tax cheats, and I don't espouse tax cheating, but there's no more hiding. There's no underground economy. It's just that your money is in the bank, and they thank you very much. Negative 5%, we'll take it. Or if you don't like it, you could take your money out of the bank. No longer. You could only spend it. So you can't hoard money. So there's no more runs on the bank. In other words, it's complete and total control of your life. That is where we're heading. And that's why I think these digital currencies are paving the way. You're going to have a central bank digital currency, a Fed coin, whatever it is. And everybody's going to be happy about it. Oh yeah, wow. And electronic money, what do you do? We have to worry about, making sure all the bills in your wallet are folded nicely and are all, in ascending order, like an obsessive compulsive person like me. Hey, you can't do that. There's no more there's no more paper money. Digital coins, currencies have replaced all paper money.
Michael Pento's message is clear. Sound money, fiscal discipline, and honest markets are the only real safeguards in an increasingly distorted economic environment. As gold gains momentum and trust in traditional safe havens erodes, will investors continue to rotate into hard assets, or is this just the beginning of a broader systemic reset? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.